Daniel. So today's topic is liquidity void, which I'm going to explain in a very simple way. Now, these are the rules, or we'll say rules, these are the points I could come up with on liquidity void. Now, one, imbalance in price action movement. Two, unhealthy price action. Three, large candles in the bullish or the bearish candles. It depends on which candle has impulsive move. Sudden impulse move, just a very big move like a flash push, or when my come candle was just going like in a buy, there's no coming back to fill some space, it's just going upward. Price must always balance those zones. It's a must for price to always balance those zones. An example, let's assume market is doing, normally we know market does higher high, higher low, higher high, higher low, higher high, higher low, and all of a sudden market just does higher high, no higher low, then it comes back to do a higher low like a small one, then continue again. There's a lot of space here for markets to fill up. Majority of the time those things are called candle. Let me give an example again. Let's assume a small one. Let me use a bearish scenario: higher low, higher high, higher low, higher high, higher low, like a long one, right? Now this is how the candle would look like. Normally candles move like this. Let me make this a little bit very dark. Candles move like this. Another one is here, another one is here. You can see this, right? It is this how candles move in. It has a sequence, that the opening of the candle and the closing of the candle and the price, opening of the price. You can see that, right? But for a liquidity void, you will see the candles moving straight like this. It will move it like this. This is the big difference between this candle scenario and this candle scenario. We have prices here that market has to fill up. We have prices here that market has to fill up that has not been filled up. This is the liquidity void that is, you can see over here. Now if you go to the chart, sometimes it might come in with a full impulse candle, a one full impulse candle, it depends. But you can see that there are imbalances here that market has not filled up, even though it has to fill up with a wick or with a body. But you can see scenario like this. Example, let's assume you are selling yam and you have yam price for, you are selling your yam for $200. You're selling your yam for $200, and all of a sudden in front of your eyes, normally you know now the way inflation works, and deflation, it has to go up, come down, go up, come down. All of those move impulse pooh, and come down to $50. You will stop selling because you don't want to lose money, right? We all know that market must come backwards. Price must always come back to fill those zones. Price will always come back to come and fill those zones, because you cannot waste money and sell your orange now for a sell, like for a bearish moment. You cannot come and sell your orange that is worth $200 for $50. So you will patiently wait for price to come back to that $200. That's why I always say market will always come back to fill up a liquidity void. Price will come back to that $200, then you can now continue your selling as a normal price action. The same thing with a buy. Let's assume you are buying fish for $50, and $50 is where you are buying your fish. A strong bullish candle moves up, and all of a sudden you just move and you say, oh my god, and the fish skyrocket to $200, and you're like, no, I can't buy that fish $200, not possible. You will wait for what? A correction price action to come and take place to come back to $50. In the chart like this now, there are many scenarios of what imbalances. You can see one here. We have what? A liquidity void here. Yeah, I don't like that color. I usually use blue and in a very light way. Okay, now you can see what happened here. I'm sorry with the color. You can see what happened here. There was what? Liquidity void being created. And what happened here? Price came and corrected those areas. You can see here again, there was what here? Liquidity void. And what happened? Price came and corrected those areas. As long as you see liquidity void, price always comes to fill those areas up. It can be used as a point of entry, and it can be used as a point of take profit. So it depends on you. what direction you're taking your trade. If you say liquidity void, be conscious because it's always used as a point of entry or can be used as a point of stop loss or take profit. Don't forget to subscribe my channel, tap on the subscription button for more content and ask your questions. Thank you very much.